My name is Dhrubashish Bhattacharya and I head the MSME business in Bank of Baroda. Alongside, I also head the co-lending piece in the bank, which is just not for the MSME but also for the retail and agri. So Bank of Baroda, being the second largest public sector bank in the country, has many milestones to be quoted, but few of them which actually I feel that it's connected to the MSME is one. We've been able to establish a K-shaped recovery post-COVID, which is growing the business at a higher CAGR as well as bringing down the NPAs to a rock bottom level. So I think on one side you're growing the business, on the other side you're improving asset quality. It was one of the milestones I believe has been pretty key in our achievement. The other could be that we have also brought in the digitization as a new way of business, because we understand that the small ticket size loan particularly are the ones where as a bank we incur a lot of OPEX. That can be curtailed alongside doing good on the asset quality. Both the things can be addressed together by going digital. So digital transformation is something which was contemplated long back. It's not a new thing, and you can see there are various strides which the bank has made in terms of digitizing both on the liability as well as on the asset side. So there are very few banks in the public sector space which has taken lead in the digital space. So we take a lot of pride in saying that the BOB digitization has always led from the front. On the asset side, if you talk of MSME, we have the digital mudra, we have the renewals, we have renewals of the normal loans up to 1 crore which are done digitally. We also have the alternate credit assessment now as BOB Digi Udyam. That's a very marquee product which we have brought in. It is the product for the future, I think, at least in the small ticket size loan. So Bank of Baroda has taken a lot of strides. I'm just quoting the MSME ones. There are other businesses also which have gone digital. So that's an interesting question. You see, Bank of Baroda has actually pioneered the co-lending in its erstwhile avatar as co-origination way back in 2019 when RBI came out with the mandate. We were the first bank to come out with a draft guideline, gotten approved by our board. And while that did not become immensely successful because of its own constraints, but at that point in time, our board was very clear that if at all a co-lending has to be done, it has to be done only digitally. So that is one of the reasons why we could not scale our volumes, because we always wanted the co-lending business to happen digitally. So we gotten, in fact, I think we claim to be one of the pioneers in kind of engaging our digital partner Knight FinTech, and they housed their particular platform in our bank, and that's how the journey started. And today we have gone far ahead, and so has our digital partner Knight FinTech. So see, we always felt that co-lending in its true essence is actually done through CLM1. While there could be challenges in terms of the digital integrations or the various APIs which come through the public repositories as well as the NBFCs, but internally we always felt that CLM1 is the true co-lending, and therefore our preparedness was done long back in the CLM1 digitization. So we engaged with Knight FinTech, and we were very clear that we should be the number one to bring this out, and half of the preparation was done way back. And then now, since we have officially and commercially, you can say, we have started booking cases in CLM1, I take a lot of immense pride to kind of announce this. See, co-lending in true sense, and as time will progress, it will stand as a testimony that co-lending is a way of doing business through partnership, right? So it helps all the three interested parties in this. One, the two lenders, of course, a bank or an NBFC or an NBFC or an NBFC or a bank or a bank, two financial institutions, and on one side the customer. I think the biggest beneficiary, which RBI when it contemplated this whole policy, was the customer. Why the customer? Because one, the customer today is been charged a slightly higher rate of interest because of the various constraints by the NBFC, and the bank's reach to that customer or that product segment was limited. So while these two institutions join hands in kind of preparing a platter for the customer, ultimately the blended rate of interest, which is the lower rate of the bank and the higher rate of the NBFC, goes to the customer, gets passed on to the customer. I think the biggest beneficiary under a CLM1 co-lending arrangement would be the customer, and therefore it will improve not only, today an MSME customer or a retail borrower or even an agri customer, you see they are extremely price sensitive. They walk very tightrope. Today, if majority of the NPAs which you see or the deterioration in the asset quality of any financial institution happens because the interest servicing is not done in time. So I think the rate of interest, if it goes down for a borrower, it will also improve the asset quality. It will improve the credit flow, as I said, because you have two big different entities joining hands to lend to one single customer. Right? It's a brilliant arrangement. It's only time will prove that how important and how productive this is. Yeah, so yes, it is challenging because it's like two different animals coming together and joining hands and in a financial space. So it's not so easy because there are various integrations which need to be done. So there are various policy alignments which need to be done, whether it's in accounting, operational, legal. So these even towards the collections. So I think these policy alignments are very, very critical because no one wants to leave their reveal their trade secret, or I would say no one would want their something which is so inherent to their organization they want to come out in public. So I think with this co-lending, so one thing especially in CLM1, one challenge which I find is the tech integration, because the tech integrations are the most critical ones. Reconciliations post disbursement when you do the collections, that's one big challenge. But I think our partner, particularly Knight FinTech, has brought this particular stuff pretty nicely, and they have kind of I would say they mastered this whole piece. And we had hundreds of discussions around this topic, and thankfully they have acceded to our request, and they have tailor-made a solution and a platform which handles both the collections as well as the disbursement piece. So when we started this whole co-lending journey, there was hardly any partner, frankly speaking, so we didn't have much of a choice. So this Knight FinTech, I remember the promoters and the founders of this company, they came and they approached us, and we found that they were pretty zealous in their zeal was unmatched, and they had a lot of I would say hunger in finding a solution. So they worked day in and day out. They try to we also roped in few other partners to we as a bank, we also have to bring out an RFP. An RFP was floated in 2021, and finally it was awarded to Knight FinTech because we saw they were a pretty young and a very passionate team. Two, they were open to a lot of discussions, and in a public sector space, as we are very critical about our policy. We are very critical about we wouldn't budge so much on being too flexible. So I think they were pretty, I would say, they understood our issues. You're working with a large bank and making something which is acceptable to a public sector bank within their policies is not an easy thing. I think Knight FinTech had a lot of patience and the gut to do that. So that was one. And two, as I said, there were not many choices. Not many people came forward. There were few, but we found Knight FinTech to be superior. And since we had done a POC with them in the year 2020, we were pretty satisfied with the progress and their commitment to the job, and that brought them to the forefront. So as I said, Knight FinTech, so we struck the first chord. We struck the first deal with Knight FinTech in the year 2022. And this is in CLM1, we again struck so there are two milestones. One, we did the first co-lending, which is under CLM1 and CLM2, both were available with Knight FinTech. Then we slowed down the CLM1 because that was a tricky one, because there was CLM1 2 which was available, and therefore like every other bank, we also went through the CLM2. But this time we now, having the RBI mandate very clear, and since we were almost prepared in the CLM1, we thought that we should take an opportune time and to declare our CLM1 go live. And it didn't take much time, because we were already prepared. We just took a couple of months and we were kind of pretty home in terms of CLM1, and we struck the deal. So I think it was Knight FinTech's preparedness on both the options, which is CLM1 as well as CLM2, right from day one, which gave us the confidence to kind of strike the deal. As I said, it's a pretty young team and very dynamic. And one thing which I find in Knight FinTech is that you don't have like other fintechs, you have a huge attrition. This is a company which has been able to hold on to their employees, and that's something which I must appreciate their gesture, the way they hold back the young team, because the young aspirants, especially in a fintech, you don't have a very high shelf life. So I think that is one big positive in them. The other is they are pretty innovative and they think slightly ahead of time. So they know what is in the coming, what is in the offing, is something which they gauge much before. And especially I interact a lot with Kushal and his team. So he's pretty poised, he understands the requirement of the day, and they keep themselves pretty abreast with the latest technology. So I think they have now started with the other banks also, and I think they will go a long way with their commitment. Okay, so CLM1, frankly speaking, if you ask me, is something which will be a slow starter. Why am I saying? Because most of the banks are used to doing under CLM2, which was very much akin to the DA, which is very easy, a seamless flow of a business. Now, a CLM1 is more of a one-on-one kind of sanctions, wherein you need to notify the customer. In the system, you have to notify through the KFS, which is key fact statement, about the bank. Joint sanction has to go, and co-branded stuff has to go. So I think it's the alignment is which is required is of a far higher order. That's point number one. Point number two, I think the digital integration piece. So everything flows into the common platform, which is developed by the partner like Knight FinTech or any other fintech. So I am sure that the readiness, we have a readiness. It is the NBFC's readiness which will matter here. If the NBFCs come forward and join hands with us and do not shy away from the issues with respect to the integrations, I think we have a long way to go, and this is the way of doing co-lending as envisaged by the RBI long back. And time has now come to prove this theory a big success. It was pretty successful in the West. I think it should also do well in India, and we are very sure that by the turn of next financial year, this will become a big hit. One is that there is no trade secret in this world anymore. The world is very transparent. You have to be very agile. You have to be very submissive. You have to be very assertive also at times. So one is that you come forward. Banks would love to engage with you. The kind of initiative which RBI has taken and the other banks have taken, I think NBFCs must come forward regardless of their size, regardless of their balance sheet size. If they have something to offer to the customer with the partnership of bank, they must come forward, and they must do it digitally only. There is no room left in co-lending for any manual interpretation. So I think if they want to really make this successful, I think bank on the other hand is something I think as a bank like Bank of Baroda or any other bank will have one advantage. They will now reach out to those borrowers who were financially exclusive till now, so that will help in financial inclusion. And the other side, they will also get into some innovative products which the NBFCs keep designing from time to time. You will have access to those products also. So I think geography is not an issue. It is the product line and the customer segment which till now were bereft of the public sector banking financing or the banking finance will immensely benefit. But overall, I think this as a philosophy serves good for all the three partners, which is the bank, the customer, and the NBFC. So a long way to go. We are still scratching the surface. I think partnership is a way to grow for the banks as well as the NBFCs. We do not eat away into our business. We don't cannibalize businesses. Very different segments. It's a win-win for all of us.